Hi everyone, welcome to another episode of Char's Corner. This week I am going to talk to you about something that not many people discuss when buying their dream home. I'm going to dive right into the 6 things to avoid when applying for a mortgage. Stay tuned. So you found your dream home and applied for a mortgage. It is really exciting to think of all the possibilities for your new home. But there are some key things to keep in mind when you are in escrow and you have not closed on your home purchase. Here are 6 things that you should avoid after applying for a mortgage. So, of course, always consult with your lender as they are qualified to explain how your financial decisions may impact your home loan. And first, do not deposit cash into your bank account without speaking to your bank or lender. The reason for this is because cash is not traceable, and lenders need to be able to source your money and income. It is important for you to discuss your transaction with your loan officer before depositing cash into the bank account. So number 2, it is to avoid any large purchases before your house closes. This means don't go out and buy a new car or spend a large chunk of money on new furniture. I know it's exciting and sometimes we can get ahead of ourselves for the sake of our home purchase. It is important to avoid these large purchases until after your home has closed escrow. So next, do not co-sign for anybody on any type of loan. This obligation raises your debt to income ratios. You say you're not going to be responsible for any of the payment on the loan. That doesn't matter. Even if you will not be doing any of the actual payment on the loan, your lender has to count the payments against your credit regardless. So the 4th thing is to keep in mind is to not change your bank accounts. Changing accounts makes the lender's task of tracking your assets more difficult than it will need to be. Keeping your accounts consistent is important. Always talk to your loan officer before transferring money around new or existing bank accounts. Points 5 and 6 are strictly about not touching your credit. Do not apply for a new credit and do not try to close any credit. It doesn't matter if it's a new credit card or a new car. Do not do it. Applying for any line of credit can affect your credit score, and when your credit score drops, it can raise your interest rates for your mortgage and could even determine your eligibility for approval. A lot of buyers believe that having less lines of credit can make them look less risky, but that's simply not true. The longevity of your credit is actually what deepens the impact your credit score, and the length and depth and total usage of your credit is going to play a large role in the actual number you see as your credit score. Closing accounts actually has a negative effect on determining your credit score and eligibility for approval. So buying a home involves a lot of moving parts, but as a skilled real estate professional with trusted lenders that I have built a long-standing relationship with, I can take you step by step through this process and put you in the best possible position to get the house that you've always dreamed of. Thanks for listening today. Stay tuned for our next segment. I'm looking forward to seeing you next week. Bye-bye.